Hey everyone, if you are a solopreneur or running a home-based business, this explainer is built exactly for you. Today, we're diving deep into home business taxes, and I'm going to show you how to maximize your deductions so you can stop leaving your hard-earned money on the table and keep way more of what you make.
Look, I get it. Doing taxes can feel totally overwhelming. But here's the thing. Every single deduction you miss, that's literally just handing your own cash right over to the IRS. Mastering your home business tax deductions isn't just about, ticking boxes for compliance. It's an immediate, totally actionable way to put cash right back into your pocket today. So let's make sure you get absolutely every break you deserve.
So, here is our wealth-building action plan for today. We're going to breeze through organization and basics, expenses and deductions, health insurance, tracking mileage, retirement accounts, and finally, hiring family members. Think of this as your personal roadmap to maximizing your savings, so definitely stick with me through all 6 of these steps.
Okay, let's dive into this with Section 1, Organization and Basics. It's all about preparing in advance.
Now, I know paperwork isn't exactly glamorous, right? But prepping in advance absolutely crushes tax season stress, and honestly, it keeps the auditors happy. To transform your setup from completely disorganized to highly optimized, you really just need to nail these 3 crucial actions. First up, file early. Seriously, do not leave it to the last minute when the panic causes you to make mistakes. Second, save all your receipts, your bills, your sales slips, and make sure your ID numbers are filed with your application so you avoid any annoying delays. And third, just cross-check those bank statements so you catch any weird discrepancies early on.
Moving right along to Section 2, Expenses and Deductions. Track everything.
When you're calculating your business expenses, you really want to track everything. I'm talking about your advertising budget, your startup costs, and yep, even the legal and accounting fees you incur. Those are fully deductible. Basically, if it helps run your business engine, it's probably going to help lower your tax bill. Now, you might be thinking you have to list out every single tiny expense, but comparing standard deductions versus itemized deductions is a huge key here. Actually, scratch that. Itemizing isn't always the guaranteed best route. Sometimes just taking the standard deduction yields surprisingly awesome results. You'll also want to cross-check things, like weighing your state income tax against state sales tax, just to find the absolute maximum relief for your specific situation.
And this brilliantly illustrates some of the more unique deductions you can claim. You've got your workspace usage ratio, which is basically just the percentage of your home that you use for business. You can deduct equipment at its original cost. You can even claim a portion of your mortgage interest or totally unconventional things like disaster damages. Wild, right? But the absolute key here is this bottom point. Keeping a daily journal for meals and entertainment. If you detail exactly who was there, what you discussed, and why it was a business expense, you're going to completely secure those unique claims.
Next up is Section 3, Health Insurance. This is a massive help for startups.
So, health insurance is actually an incredibly powerful tax break designed specifically to help smaller startups. Yet, it's kind of crazy how often home business owners completely overlook it. You can actually score tax relief on your health insurance and certain medical expenses. But, and this is a big but, the absolute crucial rule is that your claims must not be compensatory or paid out by other bodies. Basically, absolutely no double dipping. Seeking payments for the exact same claim from different sources? Yeah, that could be classed as fraud. But as long as you're playing by the rules, you can absolutely claim costs for prevention, diagnosis, doctor's fees, prescription meds, and even physical therapy.
Which brings us to Section 4, Tracking Mileage. Let's talk travel tax exemptions.
A solid chunk of your business probably involves traveling to meet clients, right? Well, even if you use your car for personal stuff too, trips taken solely for business reasons can result in a massive tax saving if you track them the right way. This brings us to mileage allowance payments. By definition, these are tax-free claims made on a per-mile basis, as long as they're paid below the current government set rate. This perfectly separates your business miles from your personal grocery runs, letting you get tax relief specifically on the travel that actually fuels your home business.
And here is a massive, often missed strategy. When you're claiming this relief, the calculations can actually be based on the total mileage allowance you set aside for the year for business travel, rather than just the actual mileage you ended up using. So you figure out the total sum you set aside and deduct that from your total earnings. That means your tax relief can be fully optimized, even if you didn't quite use up your entire planned travel budget.
All right, Section 5, Retirement Accounts. It's time to talk long-term wealth. Now, what's really interesting about this slide is how we shift from those immediate, day-to-day business deductions into building real long-term wealth. The government heavily encourages you to put money into a retirement account, and they incentivize you by letting those contributions actually reduce your current taxable income. Notice the stark contrast here between the traditional IRA and the Roth IRA. As a self-employed person, these are gold mines. Look at those age limits. A traditional IRA requires you to be under 70 and a half, while a Roth IRA has literally no age limit. And even better, for a traditional IRA, you can make your contribution as late as the first due date of your tax return. That means you can apply it retroactively to the previous tax year just to lower that bill. How cool is that?
All right, I've got a fun question for you. Can hiring your kids actually lower your taxes? I mean, it kind of sounds like a shady loophole, right? But before we wrap up today, I really want to share one of the absolute most surprising and powerful benefits of running a home business.
That brings us to Section 6, hiring family members. Let's look at these tax exemptions.
So, the answer to that question I just asked? It is a resounding yes. And it's not just a clever idea. The governing bodies actually encourage you to hire your family by offering massive tax exemptions. Just look at this number 18. When you employ your minor children in your home business, you literally do not have to pay Social Security taxes on their wages until they hit 18 years old. That is a gigantic financial saving. And the best part is that money stays right inside your family.
Plus, when you hire family, you aren't just getting a trustworthy, super dedicated team to help you grow. You're basically locking in the ultimate financial victory. Aside from that awesome Social Security exception we just talked about, you also don't have to pay federal unemployment taxes for them. You get relief from withholding income taxes. And on top of all that, insurance policies taken out on family members working in the business can be way cheaper and yield even more tax relief. It is literally a win-win for everyone involved.
So, as we wrap up this explainer, I have to ask you, are you ready to claim your deductions, organize your business, and finally stop overpaying the IRS? Look, large corporations enjoy these huge tax rebates every year simply because they know their rights. Well, now you do too. Take these strategies, apply them to your own home business, and start keeping the money you've worked so incredibly hard to earn. Thanks so much for joining me on this explainer, and go get that financial glow up.